everyone, and welcome to another Elliott Wave Forecast educational video. This time around, we're going to take a look and we're going to try to prove why we believe that news do not matter when it comes to trading. As you guys know, it's our belief in Elliott Wave Forecast that the market followed the patterns were known as Elliott Wave principle, when the market followed those patterns together with the Fibonacci levels, extensions, and retracement, and also the market followed some technical indicators like support, resistance, moving average. I mean, there are different techniques, but every day that followed, we got to the conclusion, and we see it day after day, how the Elliott Wave patterns together with the Fibonacci levels are a well-defined route that the market take day after day. Also, I want to make the mention that time is very important also when it comes to the Fibonacci times and the Elliott Wave cycles. All right, so that's what we're going to try today here in Elliott Wave Forecast educational videos. Now, we're going to start. What we did was we took the data for the last 6 months of non-farm payroll. Why the non-farm payroll? It's one of the news that usually most of the market participating observe, and it's a news that create huge swings within the market. So, but within this, after you finish watching this video, you're going to draw the conclusion that do not matter what the news is, even good, bad, or is an extremely good or extremely bad news, always the market is going to follow the Elliott Wave pattern that is presented in the market. So we're going to start with the June non-farm payroll, and then so on. We're going to go onto this month non-farm payroll. We divided this in the result as an action number, what the market did compared to being risk on, risk off, and which Elliott Wave patterns we were and why the market took that route. So we're going to start with the June result, like I say. Now, in June, the market create, the U.S. economy create 50,000 new jobs. What was the result? Risk was on. The U.S. dollar was sold on the news. But most important, do no matter what the news is, we knew as a waiver that the dollar is going to be sold. Why? Because we were on the seaway of the Elliott Wave pattern, when you can define from here 1, 2, 1, 2, 3, 4, 3, 4. By the time of the news, we were around here. We were entering the wave 5 of the seaway, and we knew at that moment that at least some dollar weakness was about to happen. Now the news accelerate onto the wave 3, and we can prove with a word the Fibo how at this low ended the wave 3. How? If you do the retracement from here, you're gonna see that we went to the 23.6%, and most important, you see that the news that the wave 5 ended at the 618, a well-defined 5-way move into the seaway. But when the news hit, we were right here. We were at the beginning of the 5th wave. Obvious, the market is gonna sell the dollar because of the news. Now, it comes to the July result, $25,000. Result, risk on. Where we were at the time of the news, on the wave 4. What you got? 1, 2, 1, 2, 3, 4, 5, 4, and you were expecting also some type of wave 5. So if the news comes right here, I guarantee you that I would say to members, the dollar is gonna get sold, because the Elliott Wave pattern is calling for that. Now, those two doesn't say too much. I mean, other than, but you're gonna see how when we're gonna go over the data, you're gonna see the contradiction there. Now, right here. 1, 2, 3, 4, 5. August result. Extremely good news. 125,000 new jobs. A result, of course, risk on. Where we were in Elliott Wave patterns, we have 1, 2, 3, 4, 5 swings. After 5 swings, what happened? I remember around this time, there was when the United States was downgraded. And I remember the world was, everyone was scared. Everyone was saying, oh my gosh, what's going to happen? The euro is going to go to 160. The euro is going to do this. And I remember me saying, it won't go there. You see 5 swings in the dollar from the bottom. So no matter what it is, it's going to be 3 swings back against the dollar. And I remember me saying that. And I remember that that's exactly what happened. After 1, 2, 3, 4, 5 swings, guess what, guys? There comes 3 swings correcting move. That's exactly what they do. Now, 125Ks, New Jones, the market sold the dollar. But also, it was very predictable that the selling was there because of the 5-way swing that needs 3 ways back of corrected. So far, so good. I mean, risk on when the number is good. Now is when the real video, the video is going to start proving to you guys that these do not matter. Here comes September new jobs. 100,000 new jobs. What the market should be, it should be risk on, right? Like it did the 3 previous months. But the Elliott Wave pattern is calling like 1, 2. In other words, you have in Elliott Wave, when you have a 5-way swing like this, and you got 3 backs, guess what? You need to get another 5-way swing minimum, right? So you got a 5-way swing here, you got a 3-way back here, and then you got another 5 with another 3, but didn't break the high, so you need to break the high. So technically, you have, when the August result came around, you were right here, you did this, and then you did this, and 1, 2, 1, 2, and when the news comes in September, you were around this area right here. Interesting. Why the market do not was risk on? Very simple, guys. Because with that number, the market should be selling the dollar. Guess what? The market buy the dollar. Why? Because the Elliott Wave pattern was calling for the high minimum about the 75.50 area. That's exactly what happened. The market went and buy the dollar. And look at the move. Of course, this move had nothing to do with the news, but the point being is that right here, instead of the market selling the dollar, guess what? The market buy the dollar. So I want you guys to see the contradiction here. Positive number, dollar sold. Positive number, dollar sold. Positive number, dollar sold. Positive number, they bought the dollar. The news do not matter. Let's keep going. We finish another 1, 2, 3, 4, 5 cycle. What's coming on the market? Dollar Windex. I remember us telling the clients we're gonna see the higher correction in the US dollar since May. I remember me saying that in Elliott Wave forecast. Well, it comes October 7, a huge number, 165 new jobs. What the market did, it bought the dollar with the news. It bought the dollar. Let me see. Let me take this line here. It was on October 7. The market bought the dollar. Interesting. This is around right here. It bought the dollar. Risk was off. And I want you guys to think why, with a better number, the market bought the dollar instead of selling the dollar? Very simple, guys. Because the market is correcting into a double zigzag, and guess what? The market come at that moment from a did a 1.236, it did a three-way move. Then the reaction from the news have to do a B-way, and that's exactly what the market did. It reacted the news to the 50% retracement of the previous 3 ways, and then follow the news on day after, follow the structure and start selling the dollar. But that telling you why the best result since the last 6 months, it wasn't risk on, it was a risk off, because we were in the wave 2 or wave B. At that moment we didn't know exactly which wave was. We were on the wave 2 or the wave B of the move. So technically speaking, right there, very well pointed out right there. 2 positive numbers, dollar was bought. 3 positive numbers, dollar was sold. Do the news matter? Can you trade the news? No, because you're gonna be losing the money, because according to the path, you should sell the dollar here, you should sell the dollar here. But according to Elliott Wave pattern, and I can go more, and I can prove it to you guys that right here there is a way. By the time of the news, there were 5 ways completed in this cycle. And then what the news did was make a correction back, even with extremely good number, the best number in the last 6 months. Now, let's come to November. That was yesterday. And I remember me calling the number exactly what the market is going to do on the trading room. We say ABC, we knew at the moment that 5 ways were completed from here. So we knew that no matter what the news is gonna be, the dollar is gonna get strong. We knew that, and we said it, and members know that we said it. Because look, I know the simple, $88,000 resort risk off, Elliott Wave pattern and wave B. Why do we knew that? Because we have the holy girl? No, it's because the market follow the Elliott Wave pattern. The market do not follow the news. I wish, guys, that you understand where I'm coming from. Let me see if I can show you in a small time frame. Look, this is yesterday. What you have? 1, 2, 3, 4. You got 5 swings right here. You know for sure that 1 or A, B, at the time of the news right here, 8 a.m. in the morning, guess what? After 5, the market is gonna go higher, because that's the way it is. In an ABC, the market should go higher there. That's very easy. Let me show you the previous one in 1 hour, and you guys gonna see. When this news comes around, it was just right there. Look, it was October the 7th at 8 a.m. in the morning. We were right here. What you see, put right there, if you put the RSI, and I'm getting a little deep here because I want to prove the point to you guys. Let me get small so you guys see what I mean. Let me see if the computer allow me to go that far. Okay, where are we? Right here. Okay, so October the 7th. Let me see if the data allow me to go down. Should be here, exactly. Should be here. What you have from here? This is the days of the news. October the 7th, 8:30 p.m. It happened right here. But what you have? 1, 2, 1, 2, 3, 4, 3, 4, and then when the new hit, you have a 5-way move. Look at the RSI proving divergency at the lows. a 5-way move from here. No way in this world that the market is going to do this. The market needs to buy the dollar no matter what the news is. The market needs to buy the dollar. And I remember now better than seeing the data that this was the count. The move ended right here, and the market did a flat. Non-fine payroll, they are very famous to do flat. Look, 1, 2, 3, 4, 5 swings. Look at the RSI with the divergence there. What the market did, A, B, and then 1, 2, 3, 4, 5. It did a B-wave flat after the news. But after 5 waves, we knew all over that the dollar is going to get strong. So guys, I hope you enjoyed the video, and I hope this video can help you guys understand that news do not matter. What matters is the Elliott Wave pattern together with Fibo levels and some technical indicators that we can use like a RSI, moving average, things like that together. But most important of all, Elliott Wave patterns and cycles. You need to know the time cycle within the waves also. Okay guys, hope you guys enjoy and understand the meaning of the video. Thank you.